But diagnostics is the sector on our radar at the moment. You have, a couple of brokerages that have come out with reports. UBS Securities says that price increases and discount moderation is likely to improve margins for the sector, while BNP Paribas says that it is positive on the volume growth with recovery for the sector. To discuss more on the sector with respect to pricing, the outlook post-COVID, we have two gentlemen joining in. First up, Ravindra Kumar, who's the Chief Executive Officer at Lupin Diagnostics. And then we have Prakash Agarwal, the Deputy Head Research Executive Director Pharma at Axis Capital, who's been tracking the space for a really long time. Gentlemen, morning to both of you. Ravindra, let me start with you.
Good morning.
Can you tell us what is the current pricing situation? Have things improved? Because for a major part of the last year, there was a lot of pricing pressure. There's high competition. The space was going through a bit of a crunch in terms of earnings. Is the worst over?
So, to be true, things has improved pretty well in a couple of months. What we are seeing right now, and there are different segment of player which are in retail as well as on digital side. And we are typically in the retail segment where we are doing pretty well, and the price is quite under control for last 6 to 8 months, and we are seeing it in right swings to move on.
Okay, so when you say things are improving, can you tell me particularly for the Lupin Diagnostics business, can you put the numbers in front of us? What is the revenue? What are the margins currently? And have you broken even in terms of, the EBITDA performance?
Yeah, so first of all, I would like to tell you that we are growing pretty well. We have now more than 400 plus outlets which are operating all across West and East India. And we recently launched our South India operation from Hyderabad, and we are on track in terms of driving the network reach in tier 2 and tier 3 cities market. And as you know, we do not break our numbers. So for all the numbers detail, probably you'll have to see our yearly outcome which comes in the month of June. But at a business level, we are right now in more than 125 plus cities. We are driving footfalls, and the great part is that as we committed that in India, there are more than 1 lakh plus labs, but hardly 2.8% are NABL accredited. We are pretty much confident, and we are driving the NABL accreditations pretty fast. Within 15 months of our time, we have 2 labs, Nasik and Pune, which are NABL accredited, and another 4 are in pipeline. I'm sure you know that in India, more than 70% of decisions in terms of treatment are based on diagnostics report. And it's very critical for any organization to drive quality services to the consumer so that a right line of treatment can be given to patients. In that,
all right. Yeah,
pretty well.
Got that, Mr. Kumar. But a couple of aspects, that our viewers and various shareholders as well would like to know. One is, you can't give us exact numbers, but are you profitable? Have you broken even? Point number one. And point number two, since you were talking about reach, what are the total number of touch points you have? And where do you see that number headed, say by the next couple of years or 2025 on?
Okay. So as I told you, we are right now just a 1-year-old organization. We started our operation in December 2021. In terms of top line, we are growing very fast and probably one of the fastest in the industry. And for rest of the details, definitely you can cross-check our financials, which will come in the month of May, June. In terms of network reach, which you asked, we are right now in more than 125 plus cities we are operating. And we have 24 plus labs. We are right now have more than 400 plus collection centers and close to 2,000 plus touch points in terms of pickup points which we are serving right now.
Sure.
So this is in terms of network.
Okay, got that. Ravindra, just stay on. We'll come to you in a bit. We also have Prakash Agarwal, who has been tracking this space very closely. Prakash, the big theme last year, right, in the last 1 year has been heavy discounting that the diagnostics companies have had to give in order to compete with sort of newer participants, new entrants. Is the worst of the discounting behind us? And how is the situation on the ground currently?
So we had a fairly good amount of channel checks, talking to a lot of online players as well as new age players who are backed by PE players. So what we see on the street is, while the discounts remain very high, I mean, they range at 40 to 75% from the rack rates, which the large diagnostic companies are offering. At the margin, the discounts are coming down, but that is only at the margin. So even after the discounts coming down, the prices are still 40 to 75% lower. So we are seeing that some of the patients, wellness consumers are shifting from the traditional diagnostic companies to these new age diagnostic companies, largely on the wellness side and as well as on the chronic illness side. So that's 60% of the market. We do see that there is pricing pressure in the industry. And if
Yes.
you compare just the last 5 year data of the large diagnostic players, their prices have remained largely constant. So
Okay.
that clearly, yeah.
Yeah. All right, Prakash, clearly you're making your case for de-rating of the sector and some of these diagnostic companies as well. So give us a couple of numbers then. What is the multiple that it normally should trade at, some of these diagnostic stocks? You believe it should be lower, I understand. So how much lower? And also as a brokerage house, how much lower are your estimates in comparison to what consensus is at?
So we are about 15 to 20% lower than the consensus numbers even today. We believe that while growth can come back, given unorganized to organized is still a very large shift that is happening. But we are a little negative on the margin side. We believe that the costs have gone up, cost of doing business has gone up, A. B, all the companies are expanding. So there is a threshold cost of setting up as well as bringing it to break even. So that cost is there. Plus raw material prices also have increased. So on the gross margin side, there's an impact. EBITDA margin, there is an impact. Plus all these large companies have also acquired large, assets like, for example, Dr. Lal has bought Suburban as well as Metropolis bought High Tech. So these also have some higher interest costs and amortization, so which leads to lower PAT margin and lower ROEs. So what you'll probably see, the ROEs which were 25-30% has come down to 15 to 20%. So there's a lot of derating already happened, but we see that it will remain stagnant. While the growth can come back, but margins will be lower is what I wanted to highlight.
Okay, just one final question from my end. Since you spoke about Dr. Lal's, the stock has lost 30% of its value, right, from the highs. It was at one point at around that 2,700 level. Do you think there's anything any trigger that could sort of take the stock back to those levels, or are you still cautious despite the fall that we've seen?
Yeah, no, so you are right. And we also highlighted in our report from a peak of 60 times plus, the multiples have gone down to around 40, 45 times. So a large part of this COVID wave had come and the street had extrapolated that. So that has come off clearly. We are seeing some headwinds currently by these online players, which is keeping the volume restricted. Yes, there are small green shoots available currently. Dr. Lal per se, as per channel checks, have taken some price hikes in select, a diagnostic test menu. But these are, I think, very small steps. Need to do something larger in terms of geographical footprint, some rationalization of prices to have a higher volume growth. India is largely a volume growth country, so we need to, have a fine balance between growth and margins, and that's what will keep the clock ticking, I guess.
Okay, all right, gentlemen. We will leave it on that note for today. Good to get your perspective on the way the diagnostics sector is really shaping up and the important triggers that lie ahead. Well, with that, we will move to our next corporate conversation.